The 2022 stock market crash continues. In the last month, the S&P 500 was down another 8.6%. Year to date, it's down 20.2%. However, my dividend income in June 2022 was my strongest ever. Many of my stocks have continued large dividend raises despite falling stock market prices. This increases the cash flow that I can use to reinvest, a great combination to have with falling prices. In this video, I'm going to explain the power of dividend investing, share the progress of my long-term dividend stock portfolio, and break down my largest month of dividend income. My name is Zach. You should leave a like and subscribe to the channel if you enjoy the video. These monthly portfolio updates document my dividend investing journey. They help me reflect on my strategy and hopefully motivate others to invest as well. Throughout this update, I'm going to be using my own dividend investing software, which is available at dividenddata.com. It allows me to analyze my portfolios, track my dividend income, and conduct in-depth research on companies. If you like what you see, then sign up with the link in the description. My current dividend portfolio value is $99,113. I'm up $13,627 overall, which is a 15.94% return on dollars invested. In total, I've invested $85,486. Nearly all my stocks have fallen in price over the last month. Even my oil stocks, which have been resilient, have now taken a 10 to 15% decline from highs. ExxonMobil, my largest position at a current value of $13,841, hit a high of $105.57 a share, and it now sits at $87.55. My total return is 138.79%. AT&T stock has been strong lately, valued at $11,042 and a price per share of $21.34. My total return with dividends reinvested is 11%. However, part of this position includes the Warner Bros. Discovery spinoff, which has tanked in price after the transaction. I'm down nearly 45% on that. I'm planning to hold on to this, but likely won't add to the position. That said, I think it is a great value right now and could provide high returns over the long term. No dividend though. The Walt Disney Company is my third highest position and currently sits at $10,584. This is my largest cost basis and I'm down 35% overall. I continue to believe in Disney over the long term. Despite the political drama, their business fundamentals are operating as good, if not better than I expected. However, their price decline makes sense given the overall market repricing. The Disney dividend has been suspended since 2020. Over the long term, the company has stated that dividends and share buybacks are a part of its strategy. Next are Microsoft and Apple, currently valued at $8,631 and $6,576 respectively. Both are fantastic businesses positioned to dominate the future. They have reliable growing free cash flow, dividends, and share buybacks. I'm going to keep buying as they fall in price, building these into cornerstones of my portfolio. Next, I have the Altria Group, which has fallen 21.5% over the last month. This was after the news of the e-cigarette Juul, of which Altria owns 35%, being banned in the US. I made an entire video going over this news and explaining how it does not impact the safety of their dividend. The fall in stock price provides an 8.5% dividend yield and a huge buying opportunity for this long-term dividend grower. Its low valuation and high dividend make it a safe value in this economic environment with high inflation and rising interest rates. I bought some, will likely buy more, and reinvest my upcoming dividends. Other notable stocks include Walgreens Boots Alliance, which has fallen over 10% in June. At the current price, it provides a dividend yield on cost of 5%. Its low valuation makes it a compelling value in today's market. 3M is also at an attractive price for a long-term dividend growth stock. Newer portfolio additions climbing up my list include Intel, Visa, and T. Rowe Price. All three are companies I'm looking to buy more of. I've made stock review videos on each. Let's look at the diversification of my portfolio by current value. Communication services is my largest sector at $23,380. This is followed by energy at $19,233. Then I have technology, followed by consumer defensive. Since my last update, I bought $920.81 of new stocks. I purchased 8 shares of Intel at a cost per share of $37.68, giving me a dividend yield on cost of 3.88%. I bought 1 share of Apple at $132.84, giving me a dividend yield on cost of 0.69%. I bought 1 share of 3M at $128.34, giving me a dividend yield on cost of 4.64%. I bought 1 share of T. Rowe Price at $104.84, giving me a dividend yield on cost of 4.58%. I bought 1 share of Disney at $92.29. I bought 2 shares of MO at a cost per share of $41.62, giving me a dividend yield on cost of 8.65%. Finally, I bought 2 shares of Walgreens Boots Alliance at a cost per share of $38.93, giving me a dividend yield on cost of 4.91%. In total, these stocks will generate annual dividends of $34.38 at a dividend yield on cost of 3.73%. On top of these new stock purchases, I reinvested all my received dividends. You can see all of these labeled yes under the dividend reinvestment column. This boosted my total investment in June to $1,326.67. I had my highest month of dividend income ever. In total, I've earned $6,002.31 in dividends and $1,786 so far in 2022. This graph shows my dividend income month by month. You can see the growth over time. The orange line shows the 3-month rolling average, which is $282.73 at the end of June. In June, I earned $405.86. This marked a huge milestone as my first month over $400 in dividends. This includes $21.19 in dividends from Intel, $17.31 from Kroger, $20.11 from the J.M. Smucker Company, $4.13 from Visa, $8.25 from Johnson & Johnson, $20.57 from Microsoft, $61.21 from Walgreens, $7.89 from Scotts Miracle-Gro, $134.35 from ExxonMobil, $28.13 from Chevron, $36.25 from 3M, $5.36 from O, $10.05 from McDonald's, $8.40 from T. Rowe Price, and $22.66 from PepsiCo. On July 1st, I received $13.02 from the Coca-Cola Company, almost at Warren Buffett's level. My upcoming dividends include $113 from Altria, $47.12 from Federal Realty, and $144 from AT&T. Dividends have provided me with reliable cash flow to reinvest during this time of falling stock prices. Additionally, my stocks have continued growing their dividend payouts. Kroger just increased its dividend 23.8%. That's awesome. I made a YouTube short discussing this news. I'm starting to experiment with the shorts format, so make sure to subscribe to see more. In a market downturn, dividends have repeatedly shown to be the most resilient way to receive shareholder returns. Across historical bear markets, the average price decline of the S&P 500 is 33.9%, while the S&P 500 dividend change is 0.5%. Even in the 2008 Great Financial Crisis, dividends only decreased 23.1%, while prices fell 57%. There have been many bear markets where the S&P 500 dividends even grow. Of course, this all depends on the strength of each individual company. The dividend aristocrats and other stocks have continued to grow their dividends every year, even throughout recessions. The strongest businesses can be resilient in all market conditions. Dividends have also proven to be a more reliable return of capital to shareholders than share buybacks. While great in their own right, buybacks often come when times are good and quickly go when conditions change. Buyback volumes dropped far greater than dividends after the Great Financial Crisis and the 2020 market crash. When stock prices are low and you want capital returned to you as a shareholder, buybacks may shrink or vanish completely. Meanwhile, dividends have historically fallen far less or continued growing. The consistent and growing cash flow of dividends is great. It allows you to continue redeploying capital at attractive prices. Also, if you plan to live off your dividend income, this can see far less volatility than stock prices. This is part of what, in my opinion, makes dividend investing a great retirement strategy. Of course, this all comes down to the strength of individual companies and whether they have the financial ability to fund and pay dividends. That question is what this channel is all about. Thank you for watching Dividend Data. You can sign up for dividenddata.com to use my software and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. Link in the description. Please leave a comment below, and thank you for watching.